Welcome to Retire Colorado. From tax efficiency to income planning, healthcare, and investments, Alicia and Josh Lewis and the team at Lehman Lewis Financial Group know what it takes to help you plan for a modern retirement. They listen to your dreams and goals to help you achieve retirement success. This is Retire Colorado.
Hello, Colorado, and welcome to Retire Colorado. I'm Bruce Steinbrock, along with Alicia and Josh Lewis of the Lehman Lewis Financial Group. Alicia, Josh, welcome to today's show.
Good morning.
Good morning. Great to be here.
Absolutely. Great to be with you both. And, we want to get retirees into and through retirement, and we certainly want to reduce that tax burden that may be coming their way. And if our assets are going to taxes, I don't think that's what you saved for those 30, 35, 40 years of your working life. So taxes can certainly attack that retirement plan, can it not?
You're absolutely right. And I think that for a lot of people could be their biggest expense in retirement, the expense that they're never going to even realize is coming down the pike.
And, Alicia, the taxes, I think people, they know they're there. They know they pay them out of their paycheck all the time. But in retirement, we're paying ourselves. So if we're paying more taxes than we believe, then it's attacking us because we're paying us.
Right. And here's the thing. A lot of people don't realize that tax planning has a lot to do with keeping more money in your pocket. And so what we like to do when we are creating retirement roadmaps for the families that we work with, we're making sure that we're doing the tax planning alongside with the income planning so that they get to keep their money rather than paying more to taxes.
You can call Alicia and Josh. The number is at the bottom of your screen. You can also log on to Retire Colorado and get some great information from the Lehman Lewis Financial Group. Now, there is a difference between tax preparation and tax planning. Josh, can you explain that difference?
Yeah, absolutely. So for all of us that might itemize our deductions, the tax preparation, that part's kind of where you bring the whole shoebox of receipts to your CPA. And they're going to look at how you deduct all of those items. And they're going to look at kind of current year taxes and how best to maximize the efficiency sort of here and now. Tax planning is looking at, hey, what does this tax liability look out 5, 10, 15 years from now? And how do we implement a strategy to make it efficient, not only this year, but in the years well beyond now?
And I think it's safe to say that we all can agree taxes are going to go up. They have to. I mean, they're scheduled to go up January 1, 2026. But the thing is, we're really actually expecting them to go up a lot sooner than that. And so what we're trying to do is position you so that you can have a better situation in the future. And sometimes that does mean looking at what have you saved for retirement that is taxable, and how can we position that better for your lifelong retirement rather than just the here and the now.
All right, so I have a quiz for you both. It's a very easy test here on the show on Retire Colorado. When is tax day?
Typically April 15th, but
right.
As of late, it's kind of nobody knows, anybody's guess. So
it's been a moving target, July one year, May the next. But typically April 15th is known as tax day. So should we start planning for our taxes in March? April 14th. When should we start planning our taxes?
Again, I think it's important to plan previously. So planning throughout the year before, even of here's how we can position you best for taxes. And sometimes that means position you best so that you don't have to pay as much in taxes this year. Sometimes it is how can we position you, and you might pay a little bit more in taxes this year, but then it's going to make it to where in the future you're going to be tax free. So again, every situation is different, but I would say across the board, don't be the person that waits until, March or April saying, oh, geez, I need to start planning for taxes. Don't do that. That is the one piece of advice that I can give every single person, and it would be the same, would be don't wait until the last minute to do your taxes. And again, I'm sorry to interrupt, but again, I do want to say we are not tax advisors. You know, we work alongside with a lot of tax advisors and CPAs, but because of our industry and what we do and the retirees that we're working with, we want to make sure that a part of their retirement plan is taxes and planning for the tax piece.
And husbands and wives sometimes have different thoughts on it. Obviously, during your working life, you're having two incomes, and one may take out more taxes than the other. When you're planning as a couple for your retirement, those taxes need to be factored both for the wife and the husband.
Absolutely right. You know, if you're married and you're filing jointly, then your tax planning needs to reflect that fact. So, you know, really getting on the same page of looking at who's withholding what from what accounts, and really kind of taking all of those details and sort of condensing them together to look at your family's tax liability, not just one person versus the other.
You know, and that's really getting on the same page is key, Alicia. And I know we've talked before about sometimes you do a little marriage advice along with this, but it is good for both husband and wife to be on the same page.
Oh, absolutely. It is crucial for that to be in place, because otherwise, sometimes you might be working against each other. So we want to make sure that everything is planned for together. Not only, like I said, not only this year, but also for the future of your retirement planning. And so a lot of times too, we always ask people, would you rather? We have this game at our house. And I'm sure you've heard of it. It's would you rather? And we ask people, would you rather pay tax on the seed or tax on the harvest? And so looking at that, so what would you rather, Bruce? What would you rather? Tax on the seed?
Yeah, I'm going to pay on the seed because my harvest I want to reap.
Exactly.
That's
and
right.
so a lot of times we'll start really digging in. People who are still working will say, okay, how much are you contributing to your IRAs, your 401ks, things like that? And how can we make sure that we're capturing that tax benefit, but also maybe not saving all of it in your 401k, but positioning some of it to where you are paying taxes while taxes are low right now. And then that way in the future, it's not going to be as such a tax burden.
We'll continue this discussion on taxes and your retirement when we continue with Retire Colorado.
There are some things you can't avoid, but you can avoid overpaying taxes in retirement. You may think your taxes will go down in retirement, but that's not always true. In fact, sometimes your tax liability could go up. We're offering a free guide to show how you may be able to pay fewer taxes in retirement. Learn how different retirement accounts are taxed and options to help make your retirement income more tax efficient, all in easy to understand terms. Download this free tax guide now to help keep what's yours and avoid overpaying taxes in retirement.
Where would you go if you could go anywhere? What would you do if you could do anything? How would you fill your days? Who would you spend them with? When you retire, what will you explore? Let us show you how a complete retirement plan can open your world to endless possibilities. Explore your retirement.
Congratulations, you did it! You worked hard and saved for retirement, but now you have questions. Could my taxes increase? How will I cover my expenses? Will my income last? You need a strategy to help make sure your hard-earned money goes the distance in retirement. That's why we're offering this free guide designed to help you determine if your nest egg can withstand the challenges of a 21st century retirement. Longer lives, increasing healthcare costs, and taxes are just a few of the possible risks to your income. Get the guide today and take the first step to help your money last in retirement.
It's Retire Colorado, along with Alicia and Josh Lewis. I'm Bruce Steinbrock. You can call Alicia, Josh, and the Lehman Lewis Financial Group team at the number at the bottom of your screen. We're talking about taxes today and how it can absolutely rob your retirement. And Josh, RMDs, people hear that acronym, the RMD, that's required minimum distribution. It is something, once you reach a certain age, you're forced to take by government standard that distribution from your retirement account. So let's talk about the tax implication and RMDs.
Yeah, so the Secure Act recently changed the law about a year ago. So now RMD age is 72, where it used to be 70 and a half. There's actually some legislation kind of circling the Congress now to raise that again, but we'll kind of see what happens. But the fact of the matter is, we're talking about taxable distributions from your tax deferred account. So it's important to recognize that when you take an RMD, it's taxed like ordinary income. So all those distributions become taxed at your highest rate because tax code is progressive in the US. Just like when you work, the more money you make, the higher your tax rate can be. So kind of similar to that. So when you think about a required minimum distribution, this is the government, our friends at the IRS saying, you have to take this money out. So age 72, it's 3.9% of all your tax deferred account. So if you're not planning for this, think about, if you have $1 million in your IRA account, that's $39,000 of additional ordinary income you're going to stack onto maybe your pension, Social Security, other income distributions from investments. So this is something to definitely plan for, because we see a lot of folks who don't take that into consideration. They kick that withdrawal down the road until they absolutely have to. And next thing they know, they're in a bit of a tax pickle. And I don't think that's a pleasant surprise for anybody.
That's not the Easter bunny waiting for you at the end of the tax line.
Nope.
Alicia, there are over 1 million tax preparers, and people come to you with someone who's prepared taxes or an accountant of some type. You obviously have folks that you work with. What about that, and how you help people navigate this and their tax preparation and their accounting as you work with them on getting into their retirement?
Absolutely. There are so many CPAs and tax advisors out there. We work with multiple tax advisors, and we also work with your tax advisor. If you're saying, gosh, I really like my CPA or tax advisor that I'm working with, and we're like, that is great. Let's just make sure that we're all on the same page, because we want to absolutely team up for you so that we can benefit you the most. And I think that that's one thing that people are like, gosh, I love that I feel like I have this team of experts, rather than just working with a CPA and then a financial advisor and then, an attorney for estate planning. We really take that team approach and say, all right, if you don't have that professional, that's okay. We will provide one for you and work with that person. But if you have one that you like, we're right on board with them as well.
So as we're thinking about retiring, Josh, maybe it's just a few years away. During the pandemic, some people were forced to retire. So what are some of those things that we should be thinking about if we're approaching those retirement years, but maybe not there just yet?
Like we've said before, it's never too early to start planning for taxes, for retirement, all of those different things. And I think for a lot of people, it's kind of sitting down with a professional and looking at how are your assets allocated? How are all of the tax designations in your accounts? Looking at what could that future tax liability actually look like for a lot of people. So if you've saved all your money in your IRA or 401k, that's great to a certain extent, but it's also going to limit some of your options. So if you're looking at doing multiple withdrawal strategies to try to mitigate some tax liability, you're going to kind of hamstring yourself in that regard. So really looking at diversifying outside of other tax classifications rather than just simply socking it all away in a tax deferred account.
And one thing we've seen a lot, just, with COVID and layoffs and things like that, is we've kind of seen two major things when it comes to work. We've seen a lot of people get laid off, and we've seen a lot of people that didn't get laid off saying, man, I am working overtime because there were layoffs, and now I'm doing the job of 4 people. And so it's this I don't really want to work anymore, but I don't think I can retire. Or the people that got laid off saying, gosh, what am I going to do? I don't think I'm old enough or have enough to retire. And that's where I would say 70% of the time we can sit down with people and really dig in and show them, no, it's okay. You can retire. It's okay. Here's the numbers, and here's the roadmap to show you this is how you do it, and it is possible. And so I think if you're having those thoughts where you're saying, gosh, I don't know if I can do this, reach out to us, because we help people through these hard times.
And you can reach out to Alicia, Josh, and the entire Lehman Lewis Financial Group team at the number listed at the bottom of your screen. This is Retire Colorado. And Alicia, there are people out there right now that they feel like I haven't done enough. You know, I put money in my 401k. I maybe have an IRA or an annuity. I know Social Security is there, but I really have done zero planning. Is it ever too late to get started planning for retirement?
It is never, ever, ever too late. And most people actually go through the accumulation phase of wealth. That's the wealth chapter of your life that you're saving, you're working. And then what happens is they get to this point and they're like, did I even do enough? Do I have the right investments? Like, what next? I don't even know if I can retire. And that's where we kind of pull everything together and say, look, you have done a great job. You just have all these different investments. Now let's make a plan with it. Let's help you figure out, hey, how is this going to be invested? Where is it going to be invested? Is it tax efficient? Where's your income going to come from? When should you start Social Security? How should you take your pension benefit if you have one? So there's all these things that are kind of floating around there, and we take them and we put them all together into a plan specifically built for you.
Yes, the plan that is yours. It is individualized. It is not cookie cutter. It is not set and forget it. This isn't Instapot retirement, folks. This is individualized plans detailed around the details that you bring to the Lehman Lewis Financial Group team. You can reach Alicia and Josh and the team at the number listed on your screen. You can also log on to retirecolorado.com. We'll continue with more tax talk and Retire Colorado after this.
It's how you remember to grab the perfect ingredient. It's making sure you have all the essentials before you hit the open road. Sometimes it's your friendly reminder there's always more to do. A checklist helps give you confidence you have everything covered so nothing slips through the cracks. When it comes to your retirement, you don't want to leave anything to chance. That's why we created our Checklist Challenge to make sure you have all the essentials for your ideal retirement. Take the challenge today. See if you have what it takes to hit the road to retirement with confidence.
You have a club for every scenario. A driver for the long holes. Wedges to get you over the hazards. And a putter for when you need a touch of finesse. What about your retirement? Will you have enough to play the back nine? Call to set your 15-minute phone visit today and let's find out. Get a second set of eyes on your retirement plan.
There are some things you can't avoid, but you can avoid overpaying taxes in retirement. You may think your taxes will go down in retirement, but that's not always true. In fact, sometimes your tax liability could go up. We're offering a free guide to show how you may be able to pay fewer taxes in retirement. Learn how different retirement accounts are taxed and options to help make your retirement income more tax efficient, all in easy to understand terms. Download this free tax guide now to help keep what's yours and avoid overpaying taxes in retirement.
Welcome back to Retire Colorado with Alicia and Josh Lewis. I'm Bruce Steinbrock. Alicia and Josh with the Lehman Lewis Financial Group right here in Colorado. You can reach them at the number listed at the bottom of your screen, and you can also catch them on the radio. We always have fun getting together. Also, Chuck Lehman, your dad, is a part of the show, Alicia, and we always love having Chuck on the show, and we love just really giving people a lot of great information and knowledge.
Absolutely. It's the passion of our lives is getting it out there and help educating people and helping them create a plan for their retirement because, hey, you've saved all your life so that you can enjoy retirement. So let's get that plan together so that you can.
So while you're saving all your life, taxes are a part of that. You paid taxes during your working life. Now let's talk about taxes during retirement. And that is the topic of our show today. And Josh, building that tax efficient strategy is so key because we don't want to change our lifestyle when we hit retirement, and taxes can cause us to change our lifestyle if we don't plan for it. So what is a key tax efficient strategy?
Yeah, that's absolutely right. Where we see a lot of folks thinking, hey, when I retire, I'm going to be in a lower tax bracket. Well, Do you want to maintain your lifestyle? Because typically lifestyle equates to income. So most people aren't in that. So tax efficiency becomes paramount in that space. So when you look at Internal Revenue Code, there's really kind of two different options to create tax-free retirement income. So life insurance can be one of those options, but the Roth IRA is one of those things that we look at for a lot of folks. And effectively what we do is we take IRA money and convert it to Roth IRA money. So if you didn't contribute, or maybe you made too much income to contribute to a Roth along the way during your working years, it's still not out of the question for your retirement. But converting that IRA money to Roth IRA creates a taxable event. So it's something that you want to make sure you pay attention to all the brass tacks when you do that and look at a lot of different things.
And let's look at some of that brass tacks, if you will. Alicia, we want to keep as much of our money in our pocket. So what are some of those things that can attack our money and take it out of our pocket? And how can you help people prepare for that?
So there's really 4 areas that we focus on a lot. One is additional tax withholding. Number 2 would be loss of certain tax deductions and credits. 3 is higher taxes on Social Security benefits, and 4 is higher Medicare premiums. So, when we focus on all of that, really it comes down to more money in your pocket for retirement.
And so key. Josh, we want to create income, and all of our working lives, we've been told save, 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 do, match your 401k, maximize this, maximize that. But Uncle Sam is going to put his arm around us in retirement with one hand, and the other hand is going to be out front saying, where is my cut? Uncle Sam will come calling on your retirement benefits.
You're absolutely right. The thing is, when people talk about taxes, it's not going to end, ladies and gentlemen, spoiler alert, right? It's going to go on in perpetuity. And again, when you look at tax code in the US, so much of that is driven by income. They look at your income brackets, how much you make, where your income's coming from. And so all of those taxes are going to be driven by those income amounts. So really it comes back to having flexibility and where you've saved your money for retirement, and making sure that you do have some options to be tax efficient, looking at RMD liability, planning for that to make sure that, hey, I'm not going to be put in a position where, our friends at the IRS push me into a higher tax bracket because of that. So you got to kind of lay all those things out on the table and look at it in a very macro sort of fashion.
And it's not just about how is my money positioned. It's also about how are you taking the income off of your portfolio. I'll never forget this gentleman came in and he said, I want more income. And so we have a team of advisors. We all sat down together and started looking at his plan and putting together a plan. And we sat down with him and just to kind of tease him, and he didn't know I was teasing him, I said, so actually we're going to have you be taking less income. And he got all up in arms and was like, what do you mean? I said that I wanted more income. And I was like, yep, but here's the thing. We're going to be more strategic on how you're taking your income off of your portfolio, which means you are paying less taxes, which means you get a raise in your income. And he was like, oh my gosh, I am so glad that I sat down with you guys, because otherwise I would have just kept taking income. And if I wanted more income, it would have been more taxed. And it's just that tax snowball, if you will. And so again, yes, it's about tax planning, but it's also about how are you taking your income off of your portfolio?
And we do want you to know it is the Lehman Lewis team that puts their heads together to help you get into and through retirement successfully. You can reach out to Alicia, Josh, and the Lehman Lewis team at the number listed at the bottom of your screen. Also, log on to Retire Colorado for some great information and some free information courtesy of the Lehman Lewis Financial Group. This is Retire Colorado. And as we wind down our tax talk today, Alicia, you also have to plan when one spouse passes in retirement. That's not always a fun subject, but it is something that you do have to prepare for, because not only do you lose one of the Social Securities you go into a higher tax bracket. And so tax strategy within retirement when one spouse passes is so key to plan for before it happens.
I mean, you nailed that right on the head. It's absolutely very crucial. And the thing is we really like to put that plan into place prior, of saying, if either spouse passes away, this is how your plan looks, rather than, having that traumatic thing happen. The loss of a spouse is a really big deal. And then having to figure out, how am I going to take my income? Taxes are higher. I sometimes we see people needing a raise. And so these are the things that we really work out prior to it happening, so that you can be prepared for it, rather than saying, shoot, now what?
Yeah, you never want to be in that position. So make those decisions before things happen. It is all about preparation, kind of the Boy Scout motto, if you will, be prepared. Alicia, Josh, always great to be with you. We will see you on the radio as well. And we appreciate all that you and the Lehman Lewis team do to help prepare Coloradoans for retirement.
Thanks, Bruce.
Thanks.
We'll see you next week right here on Retire Colorado.
Eggs. For you, they never ended up in one basket. You saved, you invested, you diversified. Then, with the right help, you grew your nest egg and found the recipe for your ideal retirement. And when it all came together, you realized it was about more than just eggs. Write your retirement recipe today. Where would you go if you could go anywhere? What would you do if you could do anything? How would you fill your days? Who would you spend them with? When you retire, what will you explore? Let us show you how a complete retirement plan can open your world to endless possibilities. Explore your retirement.